I'm in again with another video of financial statement analysis. Thank God we're at the last video or rather the last financial analysis for the energy sector in Germany. And we need to look at a company called Voltabox, which is an interesting name. As you can see straight away, performance for the last financial day was down 0.58%. If you look at Max, which is the overall performance in its lifetime, let's just quickly check actually when it was listed. It was listed on the app trading 212 in August of 2020, which was last year, about a year and 3 months ago. So in the year and 3 months, its performance has been negative 51%. Not good, of course. But let's get straight into the financials just to see if the market has correctly evaluated the value of this company. So we're going to skip company details, maybe just go over a bit, just so we get right into the meat on the bones. So Voltabox is, of course, an energy-based German company. Provider of e-mobility in industrial applications. The company has 3 business units. Volta Power offers advanced battery systems used in forklifts, mining vehicles, agricultural machinery, construction vehicles, municipal utility vehicles, electric buses for public transport, and automated guided vehicles, among others. Volta Force develops and produces lithium-ion batteries for the mass market, including starter batteries for motorcycles and sports cars, as well as monoblock batteries for industrial machines and battery systems for 48-volt mild hybrid applications. And Volta Motion works on developing supplemental drive components, including power electronics, for the complete electrification of high performance vehicles. The company operates production sites in Germany and the United States, as well as a research and development center in Aachen, Germany. So let's look at the employees. We have 111 employees for Voltabox. Headquartered in Germany, of course. Sector is technology, industry, electronic instruments and controls. Key ratios. This is where the meat starts. So the market cap is 27 million. P ratio hasn't been shown. The revenue is 18 million. But of course, as I said in the previous video, it's the net income that's most important. Earnings per share is negative, which is the first I've seen in the videos we've made so far. Dividend yield not shown. Beta not shown. Oh, sorry, beta is 1.19, which is 20% over the market average of 1. But by the way, beta just simply means the volatility of the stock. So the market average is, of course, 1, same as pretty much any average is 1 to 1. So the beta here is 20% or 19% over the average, which means it's 20% more volatile than the average stock. As you can see straight away with the income statement, the past 3 financial years, that's not including this one, that's the last financial year, the year before that, and the year before, the company has made either a little bit of profit or been negative. So in 2018, it made a little bit of profit, a tiny bit of profit compared to revenue, which just shows that its expenses are incredibly high. To run an energy-based company is not, energy-based companies are not generally very profitable anyway. They're more so there to serve the community. So they'll always exist, I believe, will exist for a long time, because they're just based on natural resources, which will always be needed. But they'll never really make much money. There'll always be giant companies like banks but they'll never make much money. If you look at banks, almost all of them have the same business financials. They never make much profit, but they always have extremely high amount of assets. So let's get straight back into the video. Profit margin is negative 204%, which automatically makes me want to just exit the video and just stop making this video, because it seems as though there's almost no point of analyzing the rest of the company's financials. I know it sounds pessimistic, but I've seen worse, but 204% negative profit margin, that is just horrendous. Let's get to the balance sheet. See, the balance sheet, actually no, the balance sheet's pretty bad. 61% debt to asset ratio. As I said over 50% is pretty high. And it seems to be the same over the past financial year, the year before last, which is 2019, 2020. No, sorry, 2018, 2019. The year before that, it seemed to be a lot less. I don't know why they increased their debt, because it seems to not have made much of a difference. Actually, it's made the company structure even worse. So maybe they came under new management. Cash flow statement, also very, very, very bad. I think it's the worst out of all three statements. As you can see, it's below the bar, below the margin. Below the neutral margin, which means it's negative. So whatever they've gained, whatever they are supposed to have gained in operating income, investing income, financing, they've just lost. So let's check in more detail. The net change in cash for the last financial year, the financial year 2 years ago, is negative 23 million. The year before that, negative 74 million, and the year before that, positive 101 million. So there's two things I have to mention. The past two financial years, the two financial years prior to the current financial year and the last financial year, the company made a negative return in terms of net change in cash. The only positive net change in cash came from the 2017 financial year. I believe that's 2016, 2017, which is about 5 years ago. So that all was wiped out anyway in the 2018 financial year and the 2019 financial year. So let me just double check 2018. Yeah, it was pretty much all wiped out because 100 million. So 74 million plus 23 million is about 100 million. So it was almost all wiped out. So this company clearly has no future. I'm sorry to be pessimistic, but this company clearly has no future because it's quite consistent. Actually, it's actually not consistent. It's actually progressively and rapidly declining in its financials. So I think it'll hit rock bottom eventually. It's like Evergrande in China. It's just really bad. It's just been managed really poorly. It doesn't have many employees either. And if you check the market cap, which we didn't look at, I apologize, I skipped that. It's 27 million. So it's a tiny company anyway. It's an extremely tiny company. So there's no point even looking at this company because it's just purely a risk. There's absolutely no point looking at it. It's got poor financials and it's a tiny company. So it's just, I don't even know why it's listed. It's really bad. But anyway, thanks for watching. I'll see you in the next one.